Fed cut odds 92%, Bitcoin steady at $111K, Solana up 3.7%, yet DeFi just lost $35 million, still scrolling like nothing's happening. Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is September 3rd, 2025. I am Nova.
I am Satoshi.
The last 24 hours, Bitcoin, it steadied itself, edged up maybe 0.7% to around $111,000. Crucially, it's holding that $110K level. Feels like a bit of a floor, maybe. Ethereum, though, slipped a bit, down about 1.1% to, $4,339. But here's where it gets really interesting, I think. Look at the major alts. Solana, SOL, jumped a solid 3.7%, made it one of the day's top performers. Even some meme coins, like PPE, climbed about 1.8%. What's your read on that Solana string, especially with Ether dipping? Is something specific pulling capital there?
Yeah, that's a sharp observation. Solana's performance, and even Pepe, it does show this kind of cautious optimism among retail traders, but maybe also an appetite for those high-performance alternatives, It's really fascinating, though, connecting to the bigger picture, is this rare move from U.S. regulators, the SEC and CFTC. They put out a joint statement, basically confirming exchanges they oversee can handle certain spot crypto trades.
Spot trades, like direct buying and selling.
Exactly. And even, interestingly, allowing leverage or margin on those trades without falling foul of existing rules.
Wow, okay. That feels significant.
It really reduces the legal uncertainty, could definitely spur some innovation. And then you layer on the macro view. Traders seem increasingly sure the Fed will cut rates. Futures markets are implying, what, a 92% chance of a quarter-point cut this month?
92%, that's high confidence.
Right. And the prospect of cheaper money that usually supports assets like crypto.
Okay, so that sounds like a pretty clear runway, doesn't it? Regulatory clarity, Fed easing expected. But hang on, there was a twist, right? Treasury yields. The 10-year yields spiked up briefly to around 4.28%. Normally, that puts pressure on risk assets, sends investors looking for safety.
Exactly, is a classic risk-off signal.
But crypto markets kind of held their ground. That resilience facing that kind of traditional signal, that's interesting. Does it suggest crypto's maturing or maybe decoupling from some of those old pressures? What do you think? Is this a real change or just temporary?
It's the critical question, isn't it? Look, it's probably too early to call it a full decoupling, but that resilience, it does hint that maybe specific crypto catalysts, like this regulatory news, can override broader economic worries, at least for a while.
Mm-hmm.
And speaking of significant catalysts,
yeah,
there was that bold move out of Japan.
Ah, yes, Metaplanet. Let's unpack that.
Yeah.
They've pivoted into becoming a Bitcoin treasury company like MicroStrategy, and they just got shareholder approval to raise roughly $880 million.
That's right, to buy more Bitcoin.
That could add over 10,000 BTC to what they already hold, which is already over $2 billion worth.
It's a huge amount.
But the key thing here, I think, is the shareholder approval. For such a massive Bitcoin buy,
yes,
it signals Bitcoin as a treasury asset is moving beyond just, visionary CEOs. It's getting deeper, more institutional acceptance, influencing corporate governance, even in places like Japan.
That's a great point. It shows real buy-in, but, and there's always a but in crypto, isn't there? This brings us to the flip side. As more money flows in, especially into DeFi, security becomes paramount.
The risks.
Exactly. And we got a stark reminder just yesterday. Over $35 million lost in one day across two big breaches.
Ouch. What happened?
Well, Fetus Protocol and BNB Chain, they lost about $13.5 million net. Looks like a phishing scam compromised a privileged account.
So human error, essentially, or social engineering.
Seems like it. And separately, Bunny XYZDEX got hit for about $8.4 million across Unichain and Ethereum. That one targeted a precision calculation error. Those tiny flaws in smart contract code attackers can exploit.
Right, the code itself being vulnerable.
It's just a hard reminder of those ongoing vulnerabilities. The operational risks in DeFi are still very real. It's a bit like the Wild West of finance sometimes, Huge opportunity.
But you got to watch out for bandits.
Precisely.
That's a perfect analogy. It puts the innovation against the risk. So how do we wrap this up for you, the listener, thinking about strategy? We're heading into, potentially a volatile time. We've got key U.S. data, like the August non-farm payrolls on Friday. That always moves markets.
Hugely influential for the Fed's thinking.
And then the Fed meeting itself in mid-September is looming large. Plus, historically, September tends to be a weaker month for markets anyway.
That's true. Seasonality isn't always reliable, but it's a factor.
So while sentiment feels cautiously positive now, maybe prudent risk management is the key takeaway. Vigilance remains crucial.
Absolutely. Look, the last 24 hours showed us a crypto market really navigating this mix. You've got supportive things like clear regulation, big institutional interest, but alongside that, these persistent DeFi security risks and those wider macro uncertainties. So maybe the question for you to ponder is this. In a world where innovation moves at light speed and the risks are just as fast, how do you tell real opportunity from potential danger? And how do you make sure your digital assets are genuinely secure as this whole market keeps evolving?
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.